What's up, guys? I'm Craig, and we're going to go over the markets real quick. We're going to take a look at some old charts of mine, the DXY, the 10-year yield. Then we're going to take a look at the Dow Jones. Things are looking like it could get really bad for the markets, but what does that mean for us? That means huge opportunity. We're going to talk about that. Now, we've talked about for a long time, if the markets do end up having a big crash, Great Depression style, or even recession style, because obviously, to me anyway, you let me know what you think in the comments below. Do you think we've already been in a recession? Because as far as I'm concerned, this economy is not growing, it's shrinking. They're having tons of layoffs, tons of store closures, tons of all kinds of stuff going on, but yet they still claim that by their fake numbers everything is growing. I don't believe it's growing. But again, let me know in the comments what you think below. We're going to take a look at the charts. At the end, we're going to take a look at Bitcoin, where we're at, what I think is happening, and so far everything is playing out. Let's take a look at it. So we're going to start off with the DXY. This is an old chart, guys. I haven't pulled this back up for a while for you guys, but I told you once we broke this 106, we'd be looking up towards the 113, 114, and all those is measured moves from here, right? But there's much higher because we had been looking at this as a bigger picture, right? I know everybody's saying the dollar is dead, the dollar is dying, blah blah blah. Yeah, to each their own on that, right? I don't think the dollar is going anywhere, but I could be wrong. Who am I? I'm just a guy on the internet, right? Anyways, I'm here to give you my opinion. Remember, none of this is financial advice, but let's go into the weekly real quick on the DXY here. And guys, for those of you that don't know what the DXY is, it is a measure of the dollar against a basket of other currencies, right? So it's showing you how it compares basically to other currencies, and it's cranking right now pretty damn good. Now let's take a look at the weekly. So this is what I had drawn out for the big picture of the DXY, right? So you can look back here in the 80s, it was all the way up to 160, somewhere in that range, right? And there was tons of inflation back then, kind of like what is going on right now, right? So anyways, I looked at this as a huge ABCDE and a falling wedge, and the measured move of that falling wedge would go from this point to that point, would get us up to approximately 178, breaking that old high. But I could also take it from here. That would give us a little bit different of a measurement, right? And that would get you right around 170. So if this is to play out like this, and again, this could take a while, it doesn't mean it shoots straight up. This is not an hourly chart, guys. This is a weekly chart. Every candle is a week. But we drew this out a long time ago. We'll see how that plays out. And for the 10-year yield, right? So we've had a target up here of the 7 to 8%, and I still think there's a good possibility we get there. Once we get above this 5.5%, I think it's going to be real obvious things are continuing down for the markets. But again, we'll have to just see how that plays out. You can see how high were we here back in the 80s, 15.7. I remember back then, obviously, I wasn't buying a house in the 80s, but when I got my first house, interest rates were like 8-9%. People were telling me that was great because they were used to like 15-20% interest back in the 80s. Crazy stuff, I know. But anyways, so this is where we're at right now here on the left. If it was to be a Great Depression style crash, like here on the right, the 1929 crash was huge. It was at 89%, might as well say 90% correction in the markets. And did it shoot back up? It did not. It took a long time. It took many years, decades, as a matter of fact. If we're going to have the same type thing, so now again, this is not financial advice, but think about it. If you bought into the markets here in the last, let's say, 10 years, right? And your dollar cost average is just about 29,000 on the Dow Jones, right? Well, if that was to happen, that would be somewhere around in here, right? How long did it take them to reach that again? And it bounced off at around 1946. So again, over 10 years. So just something to keep in mind, right? If we start seeing things get super bad, which I think we're going to, especially with housing and everything else. If you look at what's going on with housing, people didn't have to pay their rent, people didn't have to pay their mortgages, but that's all coming back now. They have to get caught up. So Landlords weren't getting money for their houses. They weren't making the mortgage payments. People that actually live in the houses and had mortgages didn't make their mortgage payments. And I know not everybody did this, but a lot of people did. And what will that do? Flood the markets when the banks get handed back the houses, right? So something just to be aware of. 2008, we had a housing market crisis. I think we're going to have an everything crisis right now. Like literally everything is in a bubble, in my opinion. Let's take a look at the Dow Jones on the daily, right? So this is what we've been watching here, this rising channel. And we'll zoom out. I'll show you why I'm looking at this as a big picture. But let's see where this daily closes. And then if next daily, which would be tomorrow, if it opens and closes below this channel here, my target for that gets us all the way down to, actually it's going to be a little bit lower because it took a little bit longer. About 38.8 is where I would look for a bounce. But you're going to want to watch for at least a small bounce here off of this trend line here from about the 39.8, 39.7 range, somewhere, depending on if, when, and where it gets there. The longer it takes, the higher that goes. But let's just say around 39.8 for a bounce. Might, rally back up 50% to 41.5, somewhere in there, and then continue down. But another thing I want to do real quick before we get into Bitcoin is let's zoom into the top of where we're at now on the weekly, right? And just kind of see what it looks like. This isn't much, right? This is just a little tiny month and a little over a month. But if we zoom in over here to this weekly, it looks very similar, guys. Just how big market crashes start. So something just to keep an eye on. Obviously, we're going to have green days, just like today. The market started out green, boom, took it back. There's going to be a lot of that stuff, guys. A lot of people are getting out of this and getting into the dollar, obviously, as you can see, the DXY rising. So just be careful there. Be careful who you listen to. A lot of these. So here's the thing. I don't hate Bitcoin. I don't think Bitcoin's going to disappear. But I do think there's a lot of people speculating and not knowing what it actually is. Doesn't even know anything about Bitcoin, how it works, where it comes from, nothing. Pure speculation. So they really aren't holding on to it because of any other reason than they wish the price continues up. So once it starts dropping decently, which if the market crashes, Bitcoin will not be able to hold up, in my opinion. I've been talking about this for a long time. Everybody thinks somehow it's a hedge against the market. I think it's exact opposite of that. I think it will crash twice as hard as the market. And I've been giving you guys my opinion on where that's going to go. We'll talk about that too here in a minute. But anyways, so I think this is an ending fifth wave diagonal. Let's look at it on the weekly, as you can see. And I have it drawn out here, right? So this is just a ending fifth wave diagonal, in my opinion. And best case scenario, that it's just a minor correction or a 30% correction. This would be like if it happened like back in 2000 where we had the dot-com bubble, right? Just one thing was a bubble. Right now we have AI bubble, housing bubble, everything bubble, right? But anyways, if it just went down like it did in 08, would get you down to about 27.8 for the Dow. If it was like the great financial crisis 2008, 20,700, somewhere in there. And if it was like the Great Depression style crash, it'd be like 6 to 7,000. We'll see what happens there. Obviously, there's no guarantees. But this is something you need to be cautious about because this could hurt a lot of people, especially the people that think they're market rich, 401k rich, haven't taken profits. Remember, profits, if you haven't taken them, they're not realized profits. So just be careful there. All right, Bitcoin. So this trend line right here is the one we've been watching. We did get a bounce off it. Remember, if this can hold this support, we can still get up to this 115 range, right? Which would be the trend line off of 2017 and up. But if we lose this 91.5, and I'll show you in the 4-hour where I think it's going if we do lose that. If we do lose this, we can bring it back now. 91,650, somewhere in that range, depending on where it hits it, guys. It is an ascending line. And then we would look at coming back all the way back down to much lower levels. But if before we go into the 4 hour, if you guys are interested in trading, check out Prime XBT. Links down below. Awesome exchange, guys. And I give out some free promo codes to put $200 in your account on X. I'll be posting some later on today. All you have to do is put them in your promo code section. You have to be the first one to use it. It'll put $200 in your account. The cool thing about Prime is you can trade gold, Forex, crypto, S&P, Dow Jones, oil, everything all from one exchange. So you don't have to keep moving money around, right? Definitely check it out. And you can use your Bitcoin to trade against it to try to either make more Bitcoin or, you know, just get into the markets more. Either way you want to do it. If you do want an exchange with no KYC, check out BitUnix. That is also down below with a bonus. So check them out. So let's take a look at where we're at here. We're looking at this as a rising, broadening wedge, right? Told you if we broke here, then we could look for these highs. But as of right now, we have not. I still think this is a good possibility that this is a 1, 2, 3 would get us somewhere down to the 73.4 range. And then, of course, a bounce back up for 4. And then 5 down to somewhere around 70 to 71,000. If this is a correct count, right? As of right now, I'm still thinking we're going to at least see this right here around this $79,000 to $80,000 range. I've been calling that for about a month now. I still think it's a good possibility. We'll see where it goes from here, but really keep an eye on this area, guys. If you break this 90, say if you break 100,000 again, that invalidates this too. And then we just may be looking at putting a 2 up much higher with an invalidation point up here. But as of right now, your invalidation point of this count is $100,000. Otherwise, I see us going down into anywhere between 70 and 80,000. We'll be keeping you updated on it on this channel, so make sure you subscribe, smash that thumbs up, leave your comments below, let me know what you think, guys, and I'll catch you in the next video. Take it easy. I hope you guys are had a great New Year's, and I wish everybody the best year ever. So let's do it. Take it easy, guys.